Welcome to the Sykes & Company PA video blog.
Pharmacies that are analyzing their financial statements, a good rule of thumb is to pull up your audit log for the month or the year to date from your script system and compare the two and see what are how the two talk to each other. And a couple of the metrics I like to look at are revenues. Are revenues pretty close to what we're reporting on the financial statements? If not, why? If it's a material difference, typically there's always a difference. Because what you're adjudicating is really never what you're picking up or receiving in actual. But, they should be pretty close there to some degree. Another thing that I'm looking at is your new scripts versus refill. We like to see the new scripts in the 50% plus. That means you're in a growth mode at the pharmacy and you're not dying. So that's something we like to look at. Obviously, your margins on the financial statements versus your margins on your audit log, there typically should be pretty close. If the margins on the audit log are way off, that typically means your pricing updates are not doing what they should be doing. You're not updating the price updates correctly, or you're using a lot of other vendors, purchasing from other vendors, not your primary, and the primary uploads are overriding what you're actually paying for those drugs. So you can see a difference there, but and that all ties into, of course, your perpetual inventory system as well. So making sure those price updates are as accurate as you can is very important. If margins are very low in the pharmacy, for example, and we're not sure, and you're a standard retail pharmacy and there's no real explanation for that, for example, if the average is about 23% margin and you're at, say, 15%, and you're a standard retail community pharmacy, and both the financials and your audit logs are showing this similar margin, well, what are you doing behind the bench to not maximize that margin? And it could go back to those price updates and what you're downloading and what you're billing out to the third-party payors. So if you're billing under AWP, for example, third-party payers are going to pay you less than what they would normally pay. And so your margins are going to be lower. And we see that sometimes. We see that where the pharmacies are not maximizing or what they're adjudicating. And that is very apparent when we get the financials in order and we're analyzing those financials. So, the audit logs are a valuable tool that should be used in conjunction with your financial statement analysis. And they can pretty much open the doors to other metrics and key things you need to be aware of.
Thank you for watching. If you enjoyed the video, we invite you to subscribe to our YouTube channel.